Today's edition of Toggle's Daily Video Insights. For those of you who are joining us for the first time, we are going to take a deep dive into one of the many insights that Toggle has produced this morning across thousands of US stocks. And if you'd like to see more of these insights, they are available on YouTube, so subscribe to our YouTube channel or check us out on toggle.global, where you can also test drive the Toggle Copilot. Today, the focus is going to be on Pulse Biosciences. In particular, we're going to take a look at what Toggle has been suggesting recently and take a look at the latest insight which had been just generated. As you can see here, actually, Toggle has been highlighting some positive price pressures for this name for quite some time. And like earlier in the year, where it correctly identified a run-up and then the end of it in the stock, it started picking up again after this sell-off. It started picking up some positive pressures yet again. Now, what we see is there's the latest one, which suggests that there could potentially be as much as 30% upside left on the basis of merely the exhaustion of the current downward trend. So Toggle is suggesting that over the following 3 months, the stock could potentially see 30% upside on the back of 14 similar occasions that it's analyzed before. The starting price is $21.81. The median target would be $28.40. Again, this is informed by those 14 past occasions as to what happened previously when this kind of selling trend has been exhausted. And this is the confidence interval where you would like to see the price to stay in order to benefit from this driver. And if it were to dip here below 1852, that means that the odds of this still being the relevant driver will have been dramatically reduced, and so it's a good place to put your stop loss or at least re-examine the place for this stock in your portfolio. Now, why might it move? Take a look at here and you can see that actually a move down of such magnitude has happened before, but hasn't happened that many times. And so over the past 4 years, we've really seen a handful of these kinds of, call them violent sell-offs. And as you can see visually here, you need to squint a little bit. In many cases, this preceded a rally subsequently that could be quite substantial. Now, how substantial? Let's look at the back test, and we can see the distribution of past returns when you've had this kind of a sell-off. Now, there have been cases where, in fact, the stock continued to go down and you could lose as much as 20%, but the upside could be well in excess of 30%. So the convexity or the risk-reward ratio in this particular trade is definitely quite compelling. However, you need to be very careful with the downside risk and be very disciplined about getting out of the trade as soon as you see it's not actually acting. And of course, the confidence interval and the red line are meant to help you with just that. So much for Pulse Biosciences. For those of you who subscribe to our daily brief, it should already be in your mailboxes. Otherwise, please go to toggle.global and you can get it there. The focus today is going to be on some relatively interesting but potentially negative dynamics we're seeing consumer credit that are worth paying attention, because it does show that the economy is ramping up leverage quite substantially, and that could be a problem down the road. So take a look, tell us what you think. As always, feedback very welcome. Meanwhile, thank you for your attention, and we'll talk to you again tomorrow.